It is December 10, 2020. It is episode number 138. AirBnB Hosts hit big on IPO. This is the 39.6 YouTube and Facebook Live Finance Show, the show that teaches high earners like yourselves how to make your money work for you so you don't have to work for your money. We talk general investing, taxes, real estate, syndications, Airbnb, paying for childcare, paying for college, and even the car you drive. All right, so I have been off the grid for the past 6 days. Haven't done a show in about a week, the longest we've gone since August. And we were at a 6-day meeting conference, Tony Robbins' Date with Destiny. OMG, what an unbelievable 6-day experience. We had to basically move small mountains to make this happen. But, you know, there are some blessings of the pandemic, and that is that some things that otherwise would have been even more challenging to do become easier because they are adapting to doing things online. Because getting my wife and I 6 consecutive days that we don't have to be at the hospital or in my clinic, I mean, is such a challenge, especially when it spans a weekend, because the conference went from Friday through Wednesday. And I don't think I have done that a single time since I've started my job. It's very complicated, but because of the way I have to see patients once a week. Even when we had our 2 kids, I think I still poked in once a week to see my patients. So this was I had to like double up my schedule on so many days, and then getting, childcare, blah, blah, blah. But unbelievably worth it. And it's like blocked out for something like, 15 hours a day. And it goes like 17 hours, 18 hours. Like there was barely any time to sleep, let alone put together a reasonable episode. So I will talk about the conference more in bits and pieces going forward, sharing some pearls. But oh my gosh, just amazing. And today's day at work was a super painful long day at work, but it wasn't painful. It was so much better because of so much of the stuff we got from the meeting conference. So highly encourage anybody to do it. It's great for relationships, but even just as a single person, actually most people who go by themselves. And because we registered and it's online, we only have to pay for one person, even though there were 2 of us. And a lot of people had like rooms full of people with this one registration. I don't know if that's going to be the way it is going forward, especially as they move back to doing things non-virtually. But I think they're going to do all their conferences for 2021 virtually. So it's a nice way to kind of get buy one, get one. Okay, enough about that. I've been off the grid for the past 6 days, and today so much stuff happened. I was looking forward to the FDA announcement, very, very closely awaiting this for the vaccine. And in other news, financial news, and stuff that I don't usually ever talk about, big IPO. DoorDash actually went IPO, yesterday or the day before, which is just, that's a little more crazy to me. I don't think it's been around that long. But Airbnb went today, and that's been something that people have been talking about for a long time. And as most of y'all know, we are Airbnb hosts, and we actually we just rented out our house over Thanksgiving for a week. I did some episodes from that rental house, and we were about to actually, starting tomorrow, have a 1-month booking for an insurance claim, and that fell through. The insurance didn't want to. I think the insurance backed out on paying for it for the person, but it was going to be a month long at like $27,000. It would have been nice. We got an actual formal request today for a week over New Year's, but it's just like a week, and it's like Wednesday to Tuesday across New Year's, and we're working that week. And anyway, moving the kids around is a big challenge. So I changed the minimum stay to 14 days to avoid some of these shorter requests. We really want to do it only for like a month or longer, but if it's 2 weeks, then we would consider. So we actually turned that down. But okay, so Airbnb actually went IPO today. There's been talk about it for a long time. So for those who aren't familiar, the alphabet soup IPO means initial public offering. Okay, so Airbnb was a private company, and all of the shares of the stock, all the ownership of that company was held by individuals or entities, and it was not publicly traded. It was not on one of the stock exchanges. Okay, you couldn't just go log into a brokerage account at Vanguard or Fidelity, E-Trade, Schwab, and log in and look up Airbnb and buy a share because it was not publicly traded. Well, that is until today. So IPO is the initial public offering, and we never know what the market is really going to price something at. And what I mean by that is we don't know what Joe Schmo investor is going to pay, like what the millions of people out there are going to buy and sell the stock at, but they often estimate it, and they put those shares on there. And once they're on there, they can trade at whatever price, but they set an initial public offering to basically sell these shares to individuals, and then they get put on the market. I've never actually bought any IPO shares or pre-IPO shares where you get the shares at the price they're getting sold at before the general public actually gets to them. Okay. A lot of people buy shares of companies when they go IPO on the public market because there's a lot of hype and a lot of excitement about it. And then they're buying it at that price, which is the price that the public is paying for it, and not necessarily the price that it was bought at by those initial shareholders. So, and this is complicated, but we actually had our first opportunity to buy like IPO shares before market. So Airbnb Hosts on November 16th, all got an email. So here is my email, and it says Airbnb's directed share program. Hello, Victor and Kate. Hosts like you are a foundation of our company, and we are deeply grateful for the community you have built over the last 13 years. So it's crazy. It's been around for 13 years already. And it says, as you may know, Airbnb has taken steps toward becoming a publicly traded company. We've heard from hosts who are interested in purchasing shares as part of our proposed IPO, and we are writing to tell you that we plan to offer a directed share program. This means we intend to reserve a portion of Airbnb shares for eligible hosts to purchase at the initial public offering price at the time of our proposed IPO. This is a complicated process, so we've provided more information about the eligibility criteria and answered some frequently asked questions here. The program will be administered by a broker-dealer, not by Airbnb. In the coming weeks, program capacity permitting, the administrator will send an email with more information directly to eligible hosts who are interested. Okay, so that was November 16th. They said, we expect that there will be a minimum purchase amount of at least $300 in addition to a maximum purchase amount. We may further limit the amount any one host can purchase depending on the total demand for the program and Airbnb's initial public offering price. Okay, there are certain regulatory and other requirements that may restrict the ability of a host to participate in the program. Hosts must be United States residents to be eligible. Okay, so and then below it says the offering is being made only by means of a prospectus. Copies of the final prospectus, when available, may be obtained from Morgan Stanley and Company, LLC. Okay, so all that being said, we got this email November 16th, and I didn't actually read it. I had seen some people in one of the Airbnb Facebook groups post about it. I honestly did not pay much attention to this. Okay, and I'm getting like FOMO now. My buddy texts me in the afternoon. He's like, dude, did you get in on the Airbnb IPO because you're a host? I was like, OMG, was that today? And then I looked it up online. So we'll get to that. But so first of all, it was done through Morgan Stanley. I don't have an account at Morgan Stanley. If I did have an account at Morgan Stanley, I would have been a little bit more interested in participating, because then I wouldn't have to like make a new account. Gosh, I have super inertia about opening up any type of new account, because I used to have like a ton of accounts in different like bank accounts, credit cards, blah, 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 blah. And I have focused so much on like simplifying things because it's just too much. Like we have like 12 investment accounts, and that's like the minimum number of investment accounts. We only have one taxable brokerage. Okay, just because of all the retirement accounts we have, like I don't need more than 12 accounts for investments. So I didn't want to have another one for one thing. And there's going to be a limit on how much. And at the end of the day, it's probably not going to be a ton of money of our net worth. It's going to be a relatively small amount. And so I'd have to have another account open just for like one thing. So it would be at Morgan Stanley, where they have what's called their direct share program, because they're the ones who are coordinating this IPO. Now, Airbnb has been all over the place this year, right? I mean, the pandemic happened. Airbnb got in super trouble earlier, like in March, April-ish. I think they were taking out raising more cash as debt. And talking about IPO, like they got really hurt. Like if they had gone IPO like last year, probably might have been a better time. But then COVID happened, and they got in trouble. They actually, in May, they had to let go of about 1/4 of their workforce, about 1,900 employees. And I think a lot of them were, I think this is down in, I think their headquarters in Austin. No, I'm sorry. That's VRBO. It's San Francisco for Airbnb. That's right. Of course. But yeah, due to the bookings crash and pandemic related travel. And yeah, they had about a 20% year-on-year loss to the COVID pandemic. And so, yeah, Airbnb has struggled a lot this year. But they still went forward and went ahead and went IPO and released today. And not very long ago, shares were planned to be at a much lower price. They were going to be at like $50 or $45. Sorry, I think about $50 a share not long ago, or even less than that, just like earlier this month. Okay. But when they finally settled on a price, they settled at $68 a share. Okay. And that was the IPO price that was going to be available to anybody who had access to it. And they were giving 7% of their shares that are going to be public. Okay. They says, this is coming from CNBC. In its public debut this week, Airbnb set aside up to 3.5 million non-voting shares for hosts, accounting for as many as 7% of the total offering. So the offering was like 50 million shares, and 3.5 million were allotted to hosts. And it's not clear which hosts were going to get access to it. I did get that email, and we have been hosts now for years. I think we probably would have been able to get in on something, but I don't know for certain. And they had initially allowed people to pre-register up to 275 shares. Okay. And they had increased that share price substantially just in the past month, from like under $50 up to $68. So people were expecting to buy a lot cheaper, and then they kind of hiked up the price recently. And then that's a little scary when they start hiking up the price. You really wonder how much returns or how much gains there's room for when they increase the price. But they decided to go at $68, and people were allowed to pre-register up to 275 shares. But from what I've read from this article and other people in an Airbnb Facebook group, that they were maxed out at 200 shares. Okay. So 200 shares at $68 a share, $13,600. Okay. So then this morning, it's crazy. I just, I can't believe it came out this high. I actually just watched a video of the CEO of Airbnb. He was being interviewed at this time, and the person interviewing was like, and now, just, you know, it was basically casually saying, oh, it's trading at over $100 a share. And the guy could not believe it. He actually hadn't known, because he was probably just interviewing like nonstop, and just absolutely nuts. So it opened at $146 a share. $146. The IPO price was $68. So 146 divided by 68. Yeah, 2.14. That's crazy. It came out at 215% of its IPO price. So yeah, if you were lucky enough to have bought 200 shares at $13,600, and it opened at 146, so that 146 times 200, $29,000. Okay. And if you subtract out what you had invested at the $68 a share, $68 a share, I just said? Yeah. So that would be like 13,600, or yeah, 13,600. There we go. So $15,600. I could have made $15,600 today if I had gotten my 200 shares and just maxed it out. And, you know, so Physician on Fire did a live Facebook Live today. And that was his, I think his first Facebook Live. It was really pretty fun. It was a happy hour. I was still at work and listening in on it. And somebody had a question about backdoor Roth, because that's the, you know, standard. You can't really get through without a backdoor Roth question. But he had brought up a great point. He's like, you know, if you were like expecting like big gains, like in an IPO, you know, a Roth IRA would be like a good investment for that. Somebody had asked, what's a good investment for a Roth IRA? Well, that would have been pretty amazing. Like if I had a Roth IRA account at Morgan Stanley, I wonder if they would have allowed me to buy the IPO shares in that Roth IRA. I think so. I mean, it's like the special direct share program. So maybe they wouldn't allow me to. Maybe it'd only be in a taxable account. But I mean, to me, buying IPO shares at the price it is at the market, like if you're buying it now, you're buying it at more than 2x what people bought it for just like a day before. Granted, it didn't close out at that price. It closed today at like $144. So still ended up with an unbelievable price at the end of the day in total. But yeah, just now people are buying it at like way more. I'm sorry, I'm probably misremembering my numbers. It was like 100 and I think 44% return by the end of the day. But regardless, it's going to be a lot harder to get gains now if you're buying it at that stock price, as opposed to if you had bought it at the $68. So yeah, buying IPOs in general, I know people get excited about them, but then there's always some outliers who do unbelievably awesome, you know, like Amazon, Uber, whatever. But a lot of them, they get hyped up so much, the price is just cranked up so high that they don't really go up more after that initial price to the market. Yeah, it ended up closing today at $144.71. Sorry, it was 113% gain according to Google here. Yeah, so from $68 up to $144.71. So yeah, if I had a Roth IRA bought at $68 and then boom, it closes out today at $144, 471 and I just cash out, because the likelihood of having great gains going forward is not that it's not high, it's just going to be a lot lower than it would have been at 68. So I could just take my risk off the table, or maybe cash out everything, all my gains. I don't know. These are things that people get into who day trade, and I don't own any individual stocks. I play the long game, and that's part of the reason why, because I mean, it's hard to decide what to do, and you really have to understand what you're doing when you're investing in individual companies. Part of the reason I didn't really strongly pursue this was that I was going through some threads on Facebook in the Airbnb communities, and there are people who had obviously looked into this already and who had put in their summary of the company from a financial aspect, and the finances of the company were just, from what I recall, I don't know what they are now, but they were just bad. I mean, Airbnb was in trouble of, they're in a lot of trouble this year. And I mean, a lot of companies have high valuations, but don't actually make any money. And yeah, they can go up in value, but at the end of the day, if no money is ever made, then is this something you really want to hold on to? And if you don't want to necessarily hold on to it, then you're just trading, you're day trading. But yeah, there's a little bit of FOMO, and it was my first time that I actually had a reasonable opportunity to get something at the IPO, the pre-IPO price. So anyway, I learned something about it though. I kind of learned a little bit more about the process. Maybe one day in the future, I will have an opportunity to buy something else at the actual original IPO price, or even earlier. But yeah, we're qualified investors now, and we'll probably have more opportunities going forward, especially if we invest in private equities, like a hedge fund of sorts. Not that I necessarily advocate for that, but yeah, you never know. I mean, we'll probably put some money at some point into some smaller companies, because I mean, it's funny. You think about it, our own personal companies are minuscule, right? And then you have publicly traded companies which are gigantic, and then there's these things in the middle which are way bigger than anything that I own, but way smaller than a lot of stuff on the public market. But yeah, I think that if you wanted to make money on the IPO side, is if you own stuff before they make it, on the market, because once it gets on the market, these prices get cranked up so high. I mean, there's all these people using Robinhood, all these millennials who are oh, Airbnb IPO, they get so excited and they just start, oh, I'll buy a share. Well, you have millions and millions of people buying a share. The price can get driven up really high because there's a lot of these people just buying individual shares and just getting priced up, and not necessarily because the company's worth that from a fundamental standpoint, but just because you're only buying one share. Why not throw $113? And actually, you know what? And these fractional shares. It's interesting when you have companies offering fractional shares, there's a little bit less that prevents people from buying a company. People will buy something just because it sounds fun. They're oh, I can buy a fractional share of Airbnb. I can just put $20 into Airbnb, and now I own $20 of Airbnb. And that can also drive up prices because there's less resistance to putting money into that investment. Okay, that's interesting. I just did a 24-minute episode, and now I have more people at the end of the episode than there were in the middle or before. I don't know how this stuff works. But yeah, so we missed out on making 10 grand right there. But it's okay. It's not part of our investment plan or goals. And if the fundamentals were stronger, then I definitely would have looked more into it. But again, this is less than 1% of our net worth, even if we were able to max this out. So, I mean, it wouldn't have been that big of a deal. But it would have been kind of fun just from an educational standpoint. But then I think about the other side, and that is, if I did take Roth IRA money, max this thing out, put in 13 grand, and then I got cut in half in a day, oh my gosh, that would be way more painful for multiple reasons. One, because you just lose the money. But two, if I were to do like in a Roth IRA and did that, then like that's Roth IRA money I can't just replace. And so then it's like, well, maybe I should have just done it in a taxable account because we haven't maxed out $3,000 of losses of this calendar year, although we still have some carryover losses. So I think we'll get to 3,000 for tax year 2020, but just due to carryover. So then I was like, well, if I did it in a taxable account and it tanks and gets cut in half, well, then if it got cut in half and I had 6,000 of losses, then at least I fill up my $3,000 of ordinary income losses for 2020 and 2021. So then you always second guess yourself based on the results. And that's not the right way to ever judge a financial decision based on the result. Financial decisions should be judged based on the decision made at the time it is made, based on the information available at the time, right? Like COVID, so many people second guess, should we have done this or that, whatever. Oh, we made a mistake before, we shouldn't have done that. No, I mean, maybe you can say that we made a mistake, but not based on what happened. Mistakes are made based on the decision made, based on the information available. Okay, like if we thought the death rate would be 3%, that's different than if we thought the death rate is whatever it is, right? These are different numbers. And a lot more information is known now than was known 8 months ago. Part of the problem is 8 months ago, we had so little information, have to make decisions based on whatever information we have, which can be drastically different. But now we also have more deaths per day than we've ever had in the country. So anyway, I'm not going to go off on that tangent any further. That is it for our episode number 138. That's a very rare time that I do a what's in the news financial topic, but this one was interesting and I learned a lot from it, so I figured I would share. And we're going to get right back into it tomorrow, I think. And okay, that'll be it. Again, my entertainment, maybe yours, not financial advice, not professional advice, not any advice, not anything besides just me talking to this microphone, enjoying some music on the Rodecaster. Till tomorrow, have a good one. Oh, let me look at the chat box. Yes, Penelope. I actually asked Penelope to get out of the closet and sit on the pillow behind me just to keep me company because I felt like having her in the background. No, I am actually using the Logitech. I am using the Logitech camera, not the iMac camera. I'm using the Logitech. And yes. All right. Until tomorrow, have a good one.